excited to have you on. And we tried to get this done in New York City a couple weeks ago when we were both out there, but couldn't make it work. So glad we were able to at least get on and introduce yourself to everyone on the show so we know who you are and
Yeah,
where you're calling from.
absolutely. Caleb Thornton, CEO of Seed2Table. We started a innovative way to connect founders to investors through a meaningful event, and so we've been doing that for a while, and that's kind of the basis of how Seed2Table was started 3 years ago. And so, yeah, excited to talk more about what we're doing and how we can help the entrepreneur ecosystem.
Yeah, no, and let's dive into it. I mean, I think, I have a lot of background in capital and some of these things, so I think we can dive deeper into some of these topics that, kind of get glossed over, I think, too much in the market and stuff. So talk to me about the event stuff, right? So, Seed to Table is an events company connecting capital investors and startups and other different types of, not just startups, right? You guys have um, all different types of, sorry, I'm getting an echo. Are you getting an echo?
A little bit, but yeah, I mean, we're connecting capital to funds as well. We're not just, it's not just the startup ecosystem, but we're also helping raise funds for funds as well. And so, I mean, that's a big part of how Inner Circle, which Austin, you've attended and been able to attend one of those events. And so, that's kind of how, we started in our community is seeing that there's more than just startup capital that's needed. It's educating and being willing to raise for funds as well.
Yeah, talk through that. I think a lot of people have gone to investor events, they've gone to capital events, they've seen pitch decks, they've seen a lot of different ways. But what have you seen as to like why Seed to Table got started? What did you see in the market, or what were you doing that you saw that there was a need for this?
That's a great question. So I mean, one of the biggest things is I come from the hospitality industry. And so I kind of connect it to what I saw in the hospitality industry. I always do the vocal thing that back in the day, going to Outback, going to Olive Garden was like very prestigious. It was a cool thing to do. But nowadays, if I told my wife that we were going to anniversary at an Olive Garden, I mean, it would be a tough conversation. And so quality has changed. It's kind of overplayed, and the quality is just not there anymore. And so we're looking at a time in the ecosystem where conferences are amazing as long as you know what to get out of them. And so if you can approach a conference with the right mentality of what's the positives that you can withdraw from that conference, there's still a lot of value there. But in the side of startups, we saw a lot of startups going to conferences for one particular reason, which is investment. And so the reason we saw three major problems in the ecosystem of conferences. Step one was the investors. You go to a conference, and if I told an investor there's going to be a room, and we'll just use round numbers, there's going to be a room of 100 people, and 60 of them are going to be startups, 40 of them were going to be investors. But only two of those opportunities, startups in the room, were value for you. It's really hard to incentivize an investor to go to an event to talk to 60 people to get to the two people that are valuable to them. And it's really not a good use of their time. And so on the side of startups, they would go to conferences, they would pitch for 5 minutes up on stage, they would come off stage, and that was their audience for the week. After that, they're just another face in the crowd. And so the problem is 99% of that audience is vendors, and they're not at that conference for vendors, they're at that conference for capital. And so you don't need a law firm, you don't need a bank, you don't need a recruitment company, you need capital in the bank. And so you're just not meeting that as you walk off the stage. And so the final talking point was sponsorship. We saw sponsors, there's three banks that sponsor an event. There's 10 more banks that come to the event. Who gets the ROI? Who gets the return? And so those questions couldn't be answered. And so Seed to Table is created to kind of solve all three of those pain points, is where we're curation on the side of startups. It's 6 startups, and it's just about them for 5 hours. And then the investors, anywhere from 50 to 100 investors per room. This really brings people that have only invested in that category of who we're having up on stage. And then last but not least, we only allow 10 sponsors in the room. And that's kind of our secret sauce. We believe the conference system is kind of changing and shifting, and we're moving to that more mom and pop. Me and my wife, we now go to Eddie V's, which is a curated mom and pop steakhouse. And so that's kind of, bringing the hospitality angle to the business world of capital. That's kind of what we're seeing.
I love that. I'm glad you use Eddie V's, because Eddie V's over capital. I'm going Eddie V's all day long. What
Yeah.
the wet age steak, man.
Yeah.
And being in Kansas City, we know I like to think I know steak, but and being carnivore,
Yeah.
but no, those are all really good points. I mean, I agree with you wholeheartedly that there's definitely been disconnects as tech has been enabled and as community and social and just the world of internet, that like there's been such a disconnect in connecting capital to deployment, right? And in a smart, intuitive way where you're not wasting a bunch of time. So,
Absolutely.
so yeah, and you do put on amazing events. I mean, the stuff out there in Utah was amazing. I'm excited
Thank you.
for what they're doing out there, and the investment pedigree too. I do want to dive into that a little bit. So you've seen a lot of founders that have raised successfully, not successfully, good product, good service, bad product, bad service.
Absolutely.
You know, smoke and mirrors versus like don't know what they have their hands on, right? And both extremes. So talk through maybe like what are three of the main things that you see when you see all these pitches and all these the capital moving, right? Because you see the front end and the back end. A lot of people don't get insights into that to see. They see the pitch and they see the whatever, they see the deck, but they don't get to see like the conversations in the community and how that transacts and if it's successful or not, right? And so
Yeah.
what are three of those commonalities or a few that you think a founder really needs to have to get traction once they're in your ecosystem, right?
Absolutely. I think one of the biggest things, the three talking points when I'm hearing to a pitch that I'm looking for is that they essentially are solving a problem, they have a solution, and then the thing, and I'm going to mix this up because I'm going to tell you what the industry does. They go to why it's complicated. That's their selling points. Those are their three selling points. Problem, solution, it's complicated. And what we forget is that investors are not experts in everything that they invest in. They're not going to be an expert at a high functioning standpoint of talking about a solution that you have through AI. AI is very complicated, and to be an expert across the board, you can't sell through the fear of it's complicated. You need to get back to the brass tacks of essentially the problem, the solution, and how we make money. And I think everybody understands that language. And so when you're talking to people, I think that people get to the investors and they think, man, I'm going to sound really complicated. So these guys are bought in. It's so exciting to them. They're super excited to get in on this because they're never going to be able to do what we do. And in reality, an investor is looking for something that solves a simple solution, that is a real problem, and then they can make money off of. Every investor understands that. And so when you get into the complicated part of why they can't create the AI system or why they can't create a life science solution, it really kind of takes them away. I think another talking point that we get to, my number two talking point, is when startups or people are pitching and they say nobody is doing what we're doing. I think that's an instant. My ears are off. The second I hear nobody's doing what we're doing, I'm no longer listening to the pitch. Why? Because it puts you in a really bad category of kind of you're guaranteeing yourself that you're a unicorn. And
No,
so
to me it's a humility. I mean, it's a automatic red flag that what else are you going to be doing in that world
correct.
of that you're so blindly confident. Like confidence is a great thing, but I think blind confidence is dangerous.
And I think going into those systems, and I use everything as a restaurant reference, but me opening an Alaskan restaurant here in Raleigh doesn't mean I'm the only one. I don't have any competition. I'm the first to do it. The Starbucks down the street, the Applebee's, the Ruth's Chris, the Eddie V's are my competition. And if I'm not realizing that, then I'm blinding myself to success. And so I really think that when you go into those scenarios, a way to reword that and phrase that, instead of saying no one's doing what we're doing. I think a new way to say the exact same thing, but to not set off alarms, is saying many people are striving for what we've succeeded here on. They have not broke through with success yet, and so that then puts in an investor's head, oh wow, a lot of people are aiming to do what these guys are doing. These guys now have a mile marker of 3 months ahead of the competition. That's something I can sell now. And so that's something that's exciting to investors, to know that you have a 3 month gap on the competition of success of a product that you've brought to market. And I think that creates a lot of traction. And then I think the last thing that a lot of founders forget is that, building out the right team and the right board is so important to an investor. And so when they look at who's going to be mentoring someone, who's going to be alongside the ride of that startup from start to finish to market, they really need people that are attracting, the right value to the team. And what I see across the board is when I see a company come to be, let's say that they're in a car industry. I always use the car industry as an example. If I knew that Audi was my number one client, if I had 5 people on my board member from Audi, that would not help me. That's a poor use of my board. And so in order to build a whole car, you've got to have a ton of parts. And so selecting your board members not in one category, I think really spreading out the wealth and understanding, showing deep mind for your investors that, hey, this is going the long run, and here are the pieces we've set on our board to make sure we get there. That way, when a investor looks at your board seats and your team, they're going, man, this guy has really thought long term, and he's thinking down the road of kind of hitting those milestones.
Mm-hmm. No, those are all. There's a ton in all that. I want to go back to one thing you said in there from that third point. That you kind of pivot. That's just it's not hitting with investors. Complicated, right? You mentioned the complexity, the complication, the AI. Just put the money in, and that's all we need. And I think almost there's another point to that of, not understanding really what capital is, and the fact that there's returns that are needed, and as much as people think they may be gaining from the complexity and solving a complex problem, there is probably 3 or 4 times the validity of your complete competency and understanding and the ability for you to, because as a CEO, you're going to sell something somewhere, somehow, right? Whether you're selling a product or a service, you're selling the company or you're selling the investments. Yeah, it's really hard if somebody can't get their mind wrapped around what's happening, right? So I think what you spoke to, the simplicity, what's in it for me, I think a lot of people miss that. Right. They do. And at the end of the day, a lot of investors just they invest in the person that they like and that they can trust. Yeah. And you still got to be able to be competent, right? But there's those other levers that I think supersede a lot of stuff that people are missing the boat on. So, okay. So diving into the event side. So you host a lot of events. I've hosted some events, and they are a pain, most times. But I probably have the systems and things that you guys have built. So talk me through, what was it like you're doing your first? I mean, I know you came from the hospitality space, so events weren't probably unknown to you. But talk me through your first capital event, and then talk me through, because you guys had some extreme growth. You guys, I think you almost doubled, right? On events just the last year. So talk me through your first one, and then talk me through what you've learned in this big scale this last year. It's kind of 2 different stages, right? I think a lot of people can glean from that.
Yeah, so we started our first event ever. We started off as a sit-down dinner style service, wedding event meets capital. And so, people were calling it Shark Tank meets a wedding. And so it evolved very quickly, because I think the biggest thing that we succeeded on is truly listening to customer feedback. And so when we went into these rooms and we listened to our clients and our sponsors and our startups, we then evolved immediately. We didn't wait for we didn't have an ego in the room. We really shifted fast. And so we used to do only sit down dinners, a short cocktail and hors d'oeuvres to start, followed by a sit down dinner during pitches. And so what we learned is that our first event, there's a bunch of clanking of silverware and noises. It just interrupts the pitch. We also realized that if you sit down at an event, you talk to the person to your left and the person to your right, and that's really it. And so that really doesn't do a lot for the networking piece. And so, Seed2Table swallowed its ego and said, you know what? We're going to really develop this into an event where it's high impact, high networking. You can meet a lot of people in a short period of time, and we're going to have the right people. And I think what we did off the bat, our first event was only 30 people. And so our first DC event was only 50 people. And so what you'll look is that if you go through our Luma numbers, is that, a majority of our wait list was in the hundreds. So our last DC event, we had 360 people on the wait list, but we only had 80 people show up to the event. And people are like, why not let in more people? You paid for 150 people for food, but you only let 80 people in the room. And it's like, in my mindset, when you let in an extra, let's call it 40 people, we no longer have 80 in the room, we have 40 in the room. Why? Because we have 40 distractions talking to 40 industry people that need to talk to each other. And so we've been very diligent on making sure the right people are in the room. And so I think, to go back to your question, how have we evolved? We listen to all customer feedback fast, and we pivot fast. And so in this industry, we went from 7 events our first year to 17 events to now 33 events in 15 different cities. And so we've grown from LA to Miami to New York this year. We're continuing to grow and listen to customer feedback. One of our biggest things that we just changed is like our panel. We just moved our panel. It used to be at the end of the event, and it would validate the startups that just pitched on stage was a part of the panel pitch. And what we found out is that startups would be engaging with investors during those panels, is because those investors are so excited to talk with those startups. And when we can put that panel first now, we're all ears on our panel, and then we're all ears on our startup, and we're immediately to business as soon as those pitches end. And so that's just customer feedback. And I think one of the biggest things that we really highlight is kind of the flow of the event. If you come to an event, it's very, I mean, Austin, you've been there.
Yeah.
It's very friendly. It's very engaging. It's very open. And so that's kind of the point of our success, is that we do events at a very high level, high touch, but with a lot of meaningful conversation happening, and making sure the right people are in the room.
Yeah, no, I've definitely seen that. I mean, I think I've experienced both of your styles, the inner circle and the one day
Seed2Table, yeah.
Seed2Table stuff. Yeah. So, and they are curated really well. I would say, like, so, and I've met a lot of the investors and the startups in there, and yeah, you have good pedigree. It's not, siloed. You got people flying in from different places too for events. And how do you curate that, and how do you maintain that? Like, what are you gonna see? What do you see? Right, you go from having 30 to 50 to being 4 times oversubscribed for your events. That's probably not going to stop. So,
no.
What do you see as something you really have to focus heavier on that you guys aren't doing now to really maintain that? Because you got some big goals and things coming up, right?
Yeah.
So,
I think our bread and butter right now has been pre-seed to Series B, and so I think moving forward, we're really going to have to focus on how we curate these events for specific raises, in the sense of this event is primarily for pre-seed seed. These events are primarily for Series A, Series B, because we have a mass jump in check writing in our room. We have $40 million checks in the room, and we have $50,000 checks in the room. And so they really mesh well together already, but I think in the future, that higher curation, I mean, everybody, when you apply to a Seed2Table event, you're getting a call. You're getting a phone call, because we're not curating just the startups. We're making sure our time is valuable as well to you guys, and that we're being meaningful to our investors. And we're calling our investors too, to make sure we understand their investment thesis and what they're interested in. And we're not just clicking an OK button that says, well, come on in. And so we're doing our due diligence on investors as well. And so I think the curation and knowing where the check size is for those investors, and maybe capping in the future check sizes at 500,000 for pre-seed seed events, and then going up to capping Series A, Series B events at $2 million check writers and up is the future of Seed2Table.
I love it. Yeah, because there is a big disparity. We have to try and handle that stuff on the debt side of alignment from a $10,000 loan up to a $100 million loan, right? And it's two completely different ecosystems. So talk through that. I think there's something here. We talked about the founder, right? And we talked about the founder and what do they mess up and what are they missing from an investor sentiment. But let's flip it on its head and look the opposite direction, right? You have a lot of investors that waste people's time. You have other investors that do a lot of due diligence. You have other investors that are strategic plus capital. Some are just capital. So flipping it around from the investor standpoint, outside of a Seed2Table event, right? They're meeting with investors all the time, not just at your events. What do they need to be thinking about from their time and their energy when they're going out in their one-on-one pitches post-event and just meeting other random people in their ecosystems? What do they need to be thinking about when they're sitting down and doing those one-on-one investor conversations?
I think the biggest thing, the main question is just the follow up with the investors. I think the best thing that a startup can do is look desirable. And by doing that, I think protecting your time is something that is immensely exciting for anyone. And I think if you share too much too quick, I think in the world of investment is kind of like dating. You gotta go kind of slow and really engage the investor the right way. Too much baggage up front scares off the investor. But if we get to our third, fourth, fifth meeting and we start looking at, going through due diligence, and now we're on meeting six, a little more baggage is okay on the table. And so I think you really got to protect your time. I think I tell all startups, when you meet for somebody, for an investor, if Austin, if you reached out to me today and said, hey, I want to get on your calendar tomorrow, I'd be like, the immediate response to a startup is, oh my goodness, yes, I'll meet you tomorrow. Like, let's meet next week, or this Friday. And so I tell all startups, don't do that. Be very calm in the moment. Say, hey, listen, Austin, I'd love to get you on my calendar. It looks like we're looking for about 2 weeks out right now. My calendar's pretty packed. And so even if your calendar is not packed within that 2 weeks, people are like, why do that? Because it's the thought process that goes through someone's head. You're now a high valued client to them already because you're valuing your time, and you're also not trying to fit people into these slots that are last second, and they're not really thought about as using your time as kind of your keepsake. And so you're making yourself valuable because they're going, man, Caleb's booked 2 weeks out. Like, it's hard to get on his calendar. This guy's got a following and a good system, and so they're already excited about kind of what you're doing. And so I think follow up too quick is scary to me. I think meeting next day, meeting same week, I think those are, to me, a red flag. I think it's getting too engaged too fast. And I think kind of looking desirable with the traction piece of like, yeah, I can get you in the next 2 weeks. Because like one of the biggest things from our event is that a company that announced that they were full on their round had the most conversation in the room. Why is that? It's because they're the most desirable. And so you've got to look desirable to startups. You can't look desperate. And so I think you've got to kind of build that structure. And there's multiple different ways you can do that other than just pushing your calendar out 2 weeks.
Yeah, no, I think there's a lot to be said about that, about the relationship, right? The trust and transactional versus relationship, and the fact that there's not many investments I've seen that are heavier on the transaction side, especially in the equities side of things. Debt, that's kind of all it is, right?
Yeah.
When you're investing in debt, but equities, it's almost the opposite, right? And it's a lot of the trust and the competency belief. And the fact that you've spent the time with them. But okay, so I want to dive into a little bit more on you, right?
Yeah.
So you're running crazy, you're head on fire, running all these events. How do you manage that with family and home life? And
Oh man.
what are some tips that you've figured out that maybe you weren't doing the first year of doing events, but now you've kind of figured some things out, and you had to? I could imagine, like, you go from what to 33 events now. It's like a lot of things have changed. I'm sure you figured some stuff out,
Yeah.
and maybe there's stuff still you're trying to figure out, but maybe it was something to leave with people of like, what are some things that you now have in place that help you manage that and stay sane?
Absolutely. And I think the biggest thing is celebration dinners. And I know this sounds a little corny, but I'm going to go through it. Essentially, my mentors kind of talked with me about, the ups and the downs in entrepreneurship. And so there's really aggressive highs and really aggressive lows in the early, I would say, 2 to 5 years. And so, there's high ups and high lows. And so what my mentor has kind of talked me into, and I do it a lot with my wife. And so she always jokes now, she goes, oh, bad news. And I say, no, celebration news. And so if we get bad news, really bad news, or we get thing that's kind of a downward tour, we book a reservation. And so we celebrate the lows. And so why? Because we know we're about to head towards a high. And so it's been a big part of my success is celebrating the lows. Don't celebrate the highs. They're only there for the moment, and there's going to be plenty of them. And it makes things so much more enjoyable when you really celebrate the lows. Why? We're celebrating, we're getting together with family, and we're having a dinner to celebrate bad news. Why? Because we know great news is coming, because entrepreneurship's a roller coaster, up and down. And so celebrate the lows. It'll make the lows kind of feel like highs. And so it's just a secret that we do with our family. With a newborn here and a 4-year-old, it's tough to find those moments to celebrate when you have bad news, and so it brings excitement to my kids' ears that we get bad news, and my wife, because it means a celebration somewhere with a good dinner. And it sounds crazy, but it really does work. It's a up while you're down kind of moment.
Oh man, that's actually really good. I haven't heard anyone that does that.
Yeah.
There's some. I mean, it makes just thinking through different ways of addressing the same kind of thing is like, getting rid of that fear and the negativity around failure. Cause it's like, I was about to push back on you and say, well, how do you know there's going to be a win? And it's like, but that's just not entrepreneurship. That's life. Like,
Yeah.
as long as you don't self-sabotage and you just stay in it, it's like, you're going to hit that next cycle again and again and again. So, but the prerequisite of failure, is almost like a heightened expectation of positivity to come. So I love that. What else have you learned? What's something that's been weighing on you that's like, man, like, I'm so glad that I'm not dealing with that anymore. I figured that out.
Yeah, I think the biggest thing is thinking and putting yourself in a category. One of my favorite quotes is you're climbing this mountain as an entrepreneur. And so the big thing is once you get to one peak, you find out that there's another peak afterwards. And so everybody's on their same level of climbing this mountain. Some people may be further up the mountain than you, but some people may be at the bottom of their next mountain. And so I think one of the biggest things that I've learned is that success, $100,000 problems in your first year turn into $1 million problems your second year, turn into $100 million problems your third year. And one of the biggest things is that the problems don't go away, they just evolve. And so to sit here and think that somebody who's running a $100 million business is different from running a $100,000 business, the worries are the same. They're just at a heightened level.
Talk more about that. Talk more about that, because I think people think you ascend to something.
No, I think people think that $100 million in the bank in revenue means success. It doesn't. It doesn't mean success. It means $100 million problems. And so the $100 million problems are the same as $100,000 problems in the sense of, do you have enough money to keep the company going? Do you have enough business to keep the company afloat? Are you engaging? You have more to manage now. You have more lives on the line that are underneath your name. You have more for the brand to be exposed to. And so it's a different form of, yes, a lot of things turn mental, in the sense of capacity of your time, but it's a lot more to manage. And I think people look at their job and they sit here and they go, "Oh, I've got $100,000 problems." Well, the guy that's working with billions of dollars has the same problems you do right now. It's about the turn and the time of how they can get money. Are they working and producing enough value for, as things grow, there's less that you can touch on your desk, and which means there's more you've got to make sure you've hired the right people. And so it's really important that you remember that and stay humble and understand that just because I upgrade and I go to the next level doesn't mean the problems go away. And I think people look at someone who's found success and they think, oh, he's so lucky, it's so easy. And it's like, nah, he's got the same responsibilities that you do. He's just at a different level of his mountain climb.
Yeah, or you see that guy that's at the top and you didn't see that before you even got to the mountain, he fell down 3 times already, and he's just finally figured out how to get past all those little things.
Yes,
that you haven't even had cleared the precipice to see them yet.
Correct.
So, man, that's such a good visual you gave me.
Yeah,
I like that. So. So what's coming up for Seed2Table, Inner Circle? What are you most excited about this next year with all that? With both, I think both individually.
Well, big news. This hasn't been released yet, but we are live here, so I guess it will be. We will be going international next year.
Nice.
So that's exciting news. You'll see us in 3 different markets next year that are international. We're super excited about that.
Where at? Can you say where at?
We can land for sure on Singapore.
Okay.
We'll
Smart.
100% be a market. Colombia will 100% be a market. The last one is to be determined, but we have a placement point for that as well. But it'll have to do a lot with a lot of things that are going on in the world nowadays. And so, yeah, we're excited for growth in that. We're going to be probably doing a 3-day summit here soon, which we're excited about. We've only done 1-day events. And so us kind of growing into a 3-day summit will most likely be on our calendar starting in November. And so more to come on that. Can't release too much on that at this point. But yeah, we've got 20 more events to go this year. We're excited for kind of the growth of where we're at. And so we're opening up Boston. We're going to open up Utah this year again. And so, yeah, we're excited for all the new markets. We responsibility.
Love it. Sorry, my thing just cut out on you that last couple seconds, but okay, so I like the growth on it. I like what you're doing for fixing kind of the market of blending the investments into deployment strategies.
Yeah.
What are you seeing just across investor sentiment, investors like, there's, we kind of go in these phases on interest rate and, venture, but you're also not just in venture, right? So you're kind of playing in a lot of different capital markets and access to capital across real estate, across venture. I think some other private credit may be in there. So talk through like, what are investors seeing from a asset allocation? Like, what are you seeing out there that's getting the most interest? What are you seeing some of the smarter investors going into that are finding gaps, right? Without, obviously there's stuff that you can't say, but like just in, maybe to help some investors that are listening to this, try to get a litmus on like who's doing it right, who's doing it wrong, right?
Yeah.
Where should they be focusing, industry wise or segments or stage, or what should they really be staying away from, I guess, one of those two.
So I always believe in the pendulum. What's at the top is going to come back. And so I think right now we're seeing a lot of growth in the aerospace and defense and space market right now with all the space stuff that's going on. A lot in AI. But I don't spend my time. I already have the relationships that I have in AI. I have the relationships that I have in aerospace and defense. I really like to chase what's coming up next. And so what I believe in our system is the next high. And so there's a lot of things that are on its back burner and it's low right now. And so, we spend a lot of time thinking about the biotech industry right now. Spend a lot of time thinking about the ag tech industry right now, because these are really important topics that are not going anywhere. And so it's really easy to get into the markets when they're at a low before they reach to a high. To meet somebody in the AI industry right now or aerospace and defense industry, it's a lot harder to get to the top players in that market. It's easier for somebody to kind of engage and get someone when the market is kind of quiet, is what we'll call it. And so not in a growth phase. And so I see, where investors are right now, I see a lot of high growth. A lot of investors are playing in the Series A, Series B market right now, validation stage. It's not just an idea, they have revenue on the table. And so those safer investments, I think for things that we need to do differently, I think in each ecosystem right now, what I see is heavy. We see this market right now where there's tons of entrepreneurs that are being created every week. And I think that's primarily to the job losses that are happening with AI, that are happening with a lot of technology that's coming out right now. And I think it only is going to increase with entrepreneurs. We are only going to grow the amount of entrepreneurs that we have in each ecosystem day in and day out. And so I think what the cities have done is they try to facilitate a market that's healthy for startups and that is that's helping startups push forward. And I think one of the biggest things that we have to step back and really analyze is, water kind of flows down the pyramid, and we need to really think about, honestly, it's not something that comes up often in topics, but how do we help funds raise capital as well? How do we help VCs? How do we help family offices raise capital as well. It's not something that's on everybody's top of mind. And I think it needs to be, because I know a lot of my funds and VCs that I work with, if we raised an extra 100 million for them today, it's not value for those individuals that are working for that fund. It's value for the startups they invest in. And so if you want to help startups, you've got to start from a different point of thinking that it's built from the bottom up. And so I think if you can really get capital to deploy those ideas and get those ideas to market, you're working at a faster pace than if you're trying to build it from the ground up.
I love that. Yeah, I think that's definitely a need on the funds and family office side. Yeah, so have you guys raised for funds and that sort, or just operating companies?
Yeah, we raise for funds as well. That's a great tail into kind of our inner circle. We were doing Seed2Table for many years, and people were like, "Can we reverse pitch in the room at Seed2Table?" And I was like, "Absolutely not. No, no, this room is for startups." And so, well, those funds came to me and said, "Well, what can we do then?" And I said, "Well, let me think about it." And so I always take some time, go to the workshop, kind of work up an idea, and I try not to create anything new. I work on the ability of what's worked in the past and how do we make it work today. And so I was trying to think back when my family has made big investments in something. And so I remember a story when I was about 12 that my family went away on a free vacation and they came back with a condo. And I was like, "Oh my goodness, that's a great idea for funding. We'll use that idea, timeshare." And so we started Inner Circle, where we said, "Hey, we're going to pull together 15 to 30 investors on a free vacation. It's going to be 95%, 5% pitch every day for lunch. You'll kind of come out and during lunch, you'll hear what that fund has to offer. And then the rest of the time you're growing with that investor. You're going on fishing charters, you're going on yachts to enjoy a day in the sun. And it's different from sitting down at a coffee shop or sitting down at a steakhouse and building those relationships over a meal. You're really developing it over a vacation, and you're building that relationship where it's like, man, I feel passionate about getting to know Austin, and I feel like I'm becoming a friend to somebody who can really understand what they're investing in and who I am as a person before they just dive in, through a coffee shop." And so it's about building another layer of trust and raising capital. And so we're doing that for funds as well on the Inner Circle side. We've done events at the Kentucky Castle. We've done events in Key West. We've done events in Utah, as you do know, Austin. And so we put together a fully captivated step back and relax on vacation. There should be nothing on your mind other than relaxing and understanding the value of the deal that's in front of you. So, yeah.
No, I love what you guys are doing with it's just different, right? Like, I think there's so many stuffy, steak dinner and you have a couple pitches and you leave the room, and it's just kind of, and the alignment. I wanted to dive into that. How do you align it, right? Like, how do you align? It's a very different investor that's going to invest. Like, I think one person I met, you have investors that invest in like global sports teams, right? Like, that's a very different disconnect from a pre-seed startup versus a real estate fund versus this. And there's different sizing. So, like, what are some things you've learned in that world that you've been able to apply to help with the alignment?
I think when people come to you for capital and people wonder why people pick up my call or my answer an email, is that they're truly only seeing deal flow and opportunity and things that they're interested in. And I think that's valuing the thing that we built our company on, is valuing time. And so we value time. And when we value my investor's time, and I only take opportunity to him that I know, I mean, you as an example, Austin, we've never reached out to you to go to events that do not spike your interest. And so if I'm not inviting investors to events that show no value to them, I'm not worrying about if I'm adding value. And so I think another big piece about, adding value as well is that, you talked about it at the beginning of this call, is that we're flying investors in. I love for investors to come to new ecosystems, but I love to bring startups to new ecosystems as well. And the point behind that is, for me to bring the largest, let's say the best life science deal, I'm going to use my ecosystem as an example. If Pappas, which is Pappas and Hatteras, are two of the largest funds that are in my ecosystem, for me to bring them a company that's local in the Raleigh area that's a life science investment that's enticing to them would be like winning the lottery. It would be like winning the lottery because everybody in this ecosystem knows who the leaders are. And they know that if it's worth its weight in gold, they're taking it directly to that firm. And so for me to try to sit here in this ecosystem and show value to those funds is not best use of my time. What's best use of my time is bringing new opportunity here for them to look at that they would not have seen if they didn't go to my events, and vice versa. If they come to my events in other ecosystems, they're meeting whole new ecosystems of investors and whole new ecosystems of opportunity in the sense of startups.
Yeah. Tell me a success story from one of your events, that's not capital. Because I think there's an important piece to this of, selfishly, a new founder raising their first time is going to see, I see it a lot, not all of them, but most of them are much more on, they're thinking too much about what they're going to get out of it and too little about what the investor is going to get out of it. But it's also the time and energy spent creating relationships, even if there isn't something there today, right now, right?
Yeah,
and just
absolutely.
kind of speak to that from some of the, because I've heard some myself, but I want to hear from you on some of those stories that are non-capital related that come out of some of these curation of people.
One of my biggest things that I say at the end of our events is that the biggest move in this room tonight is not going to be a check written. It's going to be a relationship that's built. And so not all value is cash. And so not all value is a check. Is it great? Yeah, everybody loves cash. Everybody loves a connection. But one of my greatest success stories to date is two of our companies that have come through our system have met with board advisors at Seed2Table and pivoted kind of their market strategy and their go-to-market strategy, and it completely transformed. And so Impress is one of the companies that came through our system. They met with one of our board members, completely changed the go-to-market strategy and succeeded. And then the same went with a company called Winlift that you may have heard or seen through our ecosystem as well. Winlift went through our board and kind of pivoted. I think being willing to pivot and willing to listen to the advice of where the market's going and understanding that you don't have a bad idea, it's just in the wrong market or in the wrong space, and being able to pivot fast for your investors and people that have already put into your company is not something that's bad. It's exciting, and understanding that there's larger markets out there for you. And so I would say the best success story is startups being able to pivot fast with feedback from investors in the room, and being able to acquire capital after that as well. Both those companies were able to acquire capital with their pivots. And I think the success of future entrepreneurs, one of the biggest pieces that I didn't add in there for success from entrepreneurs is being able, I think the future with technology specifically, you have to be willing to pivot fast. And so I think if you're able to pivot fast in this new developing ecosystem, you'll be very successful.
Yeah, no, and I think that's something to stay on. I mean, the whole adage of building software over the next 18 months is not a thing anymore. If you're not iterating like every week, every month, where it used to be every month. I mean, if you're not iterating every day, really, at this point, you're going to get behind, and people see that, right? The AI wrappers, like that sentiment, I think, is came and gone, right? I think investors saw it and the blip and it disappeared. I just want to say this because I get hit up so many times about AI companies that aren't AI companies that are just, and so I think that blip has came and gone. And from an investor appeal, they saw it, they see what it is now, and they see like what a real AI company is versus what an AI wrapper is.
Correct.
And so I think we came through that blip but yeah, no, this is good. This is really good. I think this large event, do you have a date for that 3-day event?
We do not have a date yet. I can't share.
This year or next year?
It is this year. It will be in November.
Oh, okay.
Yeah, it'll be an investor and startup summit, and so it'll be our first, and it'll be very highly curated. It will be a sold out event. We're extremely excited for that. But yeah, we've got a lot of growth coming, excitement coming into the new year. 2027 is going to be, a big year for capital. We see a lot opening up already. We're excited for where the investment world is going, and I think with the way the market's showing us right now, it's only going to grow. So,
love it. Well, I would say let's leave everyone with a couple rapid fire things here. So,
yeah.
And I'm just going ad hoc on this with you. So, favorite sports team?
Oh man, Patriots.
Who's the GOAT?
Oh man, Tom Brady for
Oh,
sure.
you had to say Tom Brady. You're a Patriots fan. Okay.
Yeah.
And then favorite hobby?
Oh, favorite hobby, I would say fishing. Definitely a big fisherman. Love getting out on a boat, spending some time away and just relaxing. To me, it's relaxing to go fishing. I don't call it fishing anymore. I call it catching because I've become a little better at it.
You've
And
got
so,
you don't end up with nil every time anymore.
correct. So,
Yeah.
but yeah.
I love it. We'll have to go fishing sometime. So, one last thing: how can everyone connect with you? I know we're going to put a bunch of stuff in the show notes, but if there's anywhere specific,
Yeah.
whether you're an investor um,
I think
or a startup founder, or even just someone raising capital.
Yeah, if you go through our website, it's very self-explanatory where you land as a startup or an investor. But through LinkedIn is always a huge ad as well. Growing that LinkedIn market, I feel like that's where we do a lot of business and have a lot of our connections. And so, yeah, I mean, we're open to all startups coming to our events. It's become this is a process that has grown and got very excited. I would say it's very competitive now. A lot of our events are sold out months and months in advance, and we're looking for, some of our companies right now are looking to pitch in October for their category and industry. So, I mean, you got to get in
You may
early.
be adding more events.
We
Maybe
may
add more events.
we may be adding more events. Yes, it's becoming popular. I mean, it's one of those processes since we've become a platform that's it's really truly free for these startups to come in and engage with us, and with that we have to really get the best of the best. So they're not just companies in the U.S. We've got companies from Canada that are coming in. We've got companies from Switzerland that are coming in. And so the competition is steep and you've got to be ready to go. So apply fast. On the investor side, make sure you apply. You'll be getting a call, making sure that we understand your investment thesis and get you in the right rooms. And so, yeah.
Well, awesome, man. Well, I appreciate you coming on. I mean, I've been to your events. I'm going to keep going. It is very well curated. It's got good talent. It's got good matching. It's got a good vibe, like your hospitality. I don't know what you learned there, but like I'm kind of a little bit like specific about making sure that it's good quality and like the people cared about the details. And I have not seen one red flag yet, and
Thank
I
you.
don't think I will. So you're doing it. You put out a good product.
Thank you.
And excited to see that. I'm excited for you to get to Kansas City sometime eventually and
Yes.
get some investors in and around here into something. And I'm sure we'll do that. You just
Maybe
need to,
2027.
you need to open up your calendar event for me, apparently.
I know. Maybe 2027 we'll get Kansas City on the list of cities.
Love it, man. Well, I appreciate you coming on, and I'm excited for everyone to hear this. So take care. Appreciate it.
Thank you so much.